Hey everybody, today is January 10th, and today we're going to talk about the stock market. So the stock market this morning took quite a bit of a plunge, right? We saw the stock market gap down, and right now we're seeing a nice recovery, but still not quite a full recovery, right? We still have this gap that may or may not fill by the end of the day, which this day is still open. It closes, the trading day closes in about 15 minutes, but we're seeing a nice bounce. So the question is, are we going to continue down more? Or are we going to get a nice bounce from here and continue up towards all-time highs, right? Before we begin, please read this disclaimer. You can pause this video as you read it. Okay, so previously what we talked about were some of the concerns going into the new year, right? The main concern is the Fed tapering of their bond buying program, and also rising interest rates, projected to be three interest rate hikes this year and another three in 2023. So the question is, what is the impact on the market, and what are institutional investors doing, like the people with the big money? And we've seen some choppy price action over the past over the past 2 to 3 months, based on anticipation of the Fed tapering the bond buying program and also raising interest rates. And so the question is, and we'll find out later this week when the Fed does their first meeting of the new year, to the extent of how fast they're going to do the tapering and interest rate rise, and to what magnitude, right? And that's definitely going to affect the markets. But the market is definitely, I think, selling in anticipation of potentially bad news. So what does this mean? It means that if the Federal Reserve comes out with good news, maybe they're not tapering as much or they're not tapering as fast, we can see a nice rally, perhaps to all-time highs. Or if it's not as bad, because I feel like right now the price, there's just a lot of there's a lot of that the market is pricing in bad news, basically. And so if we don't get bad news, or the news isn't as bad as it seems, we can see a nice market rally by the end of this week, right? And also this week is going to be earnings seasons, right? So we're going to start seeing banks. They're going to start reporting, and if the banks are doing well, which I believe they will, we should see a nice market rally, especially in the Dow, because the Dow has a lot of bank stocks, right? And that will help bring the market back up. But right now the market is pulling back, and as you can see on a technical level, we're starting to see a bit oversold, right? We talked about previously last week. I put this last time when we did a video, I talked about how this was a nice bounce, and if we can hold the 100-day, which is this gold line, right, we can see a nice bounce to the previous all-time high, and that's exactly what happened. But now we're seeing a nice pullback, right? And I think part of it is just because we moved up too quickly, so we need to retrace back down, fill up some of these gaps that we made, the market made when it went up. So now it's down, and we do have a down gap. So if tomorrow the market can gap back up, or push up and fill this gap, that'd be very bullish, and I can definitely see the market returning to all-time highs, just kind of like similar pattern to here, right? Down, touch, form support at the 100-day moving average, down and up again, right? I said something similar on my Twitter page, where I said that, in the past year, the market tends to pull back to its short-term moving averages, and sometimes to its mid-term moving averages, right? But it always tends to hold, and these end up being really good buying opportunities, right? And I also said that, if the short sellers are aggressive and they push the price, the stock market below the 50-day, right? And by the way, I'm talking about the S&P 500 as the stock market, right, in general. If we push below 50-day, we might hit the 100-day, and that's basically what's happening right now. But we're seeing a nice bounce, very similar to what we saw last time it touched this level. We saw a nice push back up, and I think that something similar is going to happen if two things happen. First is if the Federal Reserve the Fed minutes later this week are good, or they're not. Either they're more dovish, or they're not as bad. It's not as hawkish as people expect, right? Unless they do something like, oh, we're going to start tapering right now, or raise interest rates really soon, and they raising interest rates a lot higher than most people expect, or tapering a lot soon, or a lot more than people expect, right? Then we can see a nice pullback. But as of now, the technicals they're still holding up on a macro level. We're still making lower highs, or sorry, higher lows, higher lows and higher highs, right? Still in uptrend, and these moving averages are showing it, right? Like I said, we tend to, in a healthy bull market, right? This is 2021. We saw multiple pullbacks, right? Multiple pullbacks to these short-term moving averages, and sometimes to the gold line, the mid-term moving average. And that's what I said in my, that's what I was trying to make the point in my Twitter post over here. Was we had multiple pullback to the support, and these were all good buying opportunities in retrospect, right? So as long as the bulls are able to hold this sort of price action going up in a sustainable uptrend, we have to give benefit of doubt to the bulls, right? That these pullbacks should be good buying opportunities, and the market should continue up higher until major structural support is broken. Like for example, to the downside, we take out this low over here, then we enter a bear market, or at least a deeper correction down to perhaps 20%. But for right now, until that happens, until we break major market support either below 430 or below the 200-day moving average, which is this blue line, right? As long as we hold above, we have to continue to give benefit of doubt to the bulls that the market structure will continue to go up higher, right? But right now, like I said, we're seeing a nice bounce here after being pretty much oversold over the last 5 sessions, right? And the MACD definitely is trending down, but we do want to see the price move higher, and that's going to pull the MACD up higher, and also the RSI to a from neutral to more overbought territory. And then we can talk about whether we want to see the market continue higher, or whether we want to start to take some profits off the table. But for now, it does seem like this is following a very similar pattern to what we've seen previously, and this should follow through with a nice bounce going into the rest of the week. Fear and greed index now at fear, right? Which is interesting because we're near all-time highs, but the market is still there's still a lot of fear, which leads me to believe that there's still a lot of upside, right? Usually when the market is at all-time high and if the fear and greed index is really high, that's usually when you want to be careful and you want to consider getting into like short positions or at least taking some profits off the table, right? But for now, things are for now holding up, I guess. Let's look at some of the interest rates. And another reason why the market has been hit pretty hard, of course, with the anticipation of rising interest rates, right, and tapering, we're starting to see yields go up, right, just ripping higher, and also the dollar is still relatively strong, right? The dollar has been very strong last year, making this nice rally, and that's putting a lot of pressure on stocks, especially risk-on assets like growth stocks, right? And that's why we've been seeing the Nasdaq being hit pretty hard, right? The Nasdaq today went below the 200-day moving average, right? But it's since recovered, right? It just wicked below this morning and then recovered very quickly, and will likely close above the 200-day, which is very bullish, right? But we do want to see follow through and defend these levels, right? If we start to see it break down below, we're gonna start breaking major market structure, and that's gonna be a lot more bearish, right? But for now, as long as these major moving averages, these price action continues to make higher lows, higher highs, and be able to defend these, and the price is able to defend these moving averages, we should give benefit of the doubt to the bulls that the trend will likely continue up higher. But again, there's two very important fundamental things happening this week. First is going to be the Fed minutes. It's going to tell us what the Fed is thinking in terms of their action regarding tapering and rate hikes. And like I said, if the rate hikes and tapering news is worse than expected, then we'll likely see the market pull back even more, right? But if the rate hikes and tapering is as expected or even more dovish, maybe not as bad as people expect, then we'll definitely see the market rip higher, right? Another thing is earnings seasons, right? Banks are going to announce their earnings first, and that's going to kick off their earnings seasons. And if the earnings seasons are good, that could, at the very least, provides a bit of a cushion if the minutes are bad, right? But I do expect that the earnings will likely be good. And the market overall, it gives us time to get in and buy these pullbacks. So it's up to us to listen to what the market is saying, right? We had multiple pullbacks, right? We had 3, 5, 6, 7, 8, 9, 10 major pullbacks in 2021. And so I do expect there to be even more pullbacks in 2022 as the market continues to grind higher. And these could be good buying opportunities, right? We're seeing a nice bounce today among all major indices, right? The Dow, S&P, and the Nasdaq, right? And so these could be potentially good buying opportunities. Again, not financial advice, right? Make your own decisions based on your own due diligence. But if we just look at history, right? History shows us that when we have pullbacks to these important moving averages, right? The 50-day, the silver line, 100-day, the gold line, and the 200-day, our long-term moving average, the blue line. These tend to be more often than not good buying opportunities, right? So if you're able to see through the panic and the fear that people are going through when they panic sell when the market's going down, this could be a good opportunity to scoop up your favorite stocks, your favorite companies at bargain prices. So again, there are two important events happening: the Fed meeting and the earnings report, and we'll definitely update you as those very important fundamental factors come out, and we'll see how that affects the market. We'll see if we can hold the 100-day. If we can, we should be moving up towards new all-time highs again and continuing this uptrend that we had starting in 2020, really nicely continue to 2021, and we'll see if 2022 can be another great year for the stock market. Thank you for watching this video. If you found it useful, helpful, and informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.